Good morning, investing world. This is, of course, our stock market morning update coming to you from investingtherightway.com. And so let's talk about what happened yesterday. So yesterday, I told you that I kind of give you undecided information that sounded like I was on the fence because I was. Yesterday I told you, I said in pre-market trading we were pointing down, but I kind of feel like it should be a red candle based on our candle, or a green candle based on our candle formation. However, if we open below the 20-day moving average, we're going to have a red candle, and if we open above the 20-day moving average, we're going to have a green candle. That's how I felt about our day. Well, technically, we opened above our 20-day moving average. But let me explain to you a trick that the market makers tend to do. The market makers, they're just like most investors, that they make money if the market goes up. The market makers make money just like regular investors do, okay? But they tend to make money only if the markets move up because they deal with stocks more so than they do with options. They don't play options so that they can, make money if the market goes down. They make money if it moves up. So they have an incentive to try to make the market go up. And one of the tricks that they play is they almost never gap the market down. They can look at the numbers and see that it's going to drop, but they'll tend to open it higher. And hopefully then, if they're above a moving day average line, right, and they open it higher, even though they know it's going to immediately start to fall within the first 2, 3, 5, 10 minutes. What they're hoping is as it moves down, it triggers all of these computers out there for these big boys that buy stock, so that when it hits that moving day average line, those computers automatically kick in and buy a bunch of stock and cause the bounce to happen. That's what they're hoping for, okay? Now, how do I know that? I just do. I don't see it written anywhere, but in watching the market day to day, like I have, and understanding a little bit of how the market works in the background, I can tell you that's what they're doing, because they almost never, ever gap the market down. You can be 20 points down. We were 20 points down at one point yesterday before the market opened, but they refused to gap the market down 20 points and open the market. Instead, they opened it high and let it drift down, hoping that they would get that automatic bounce from those computers, from all those big boys out there. It didn't happen. So while we did technically open above the 20, I count the first 5 minutes as the actual opening minute, if that makes any sense to you. Because in those first 5 minutes, it's going to drift immediately based on all the pre-market activity. Well, within the first 5 minutes, we were well below the 20-day moving average, and we drifted down for the rest of the day. Here's the graph for the minute chart for the entire day that shows the basic movement. And you can see right here in the very first 3 minutes, we dropped like a stone, and that put us well below the 20-day moving average. We went down for the rest of the day. So now we've had 2 back-to-back days where we have got down close to the 50-day moving average, had significant movement of a 25 to 30 point day, because yesterday we just went down. But the day before that, we went all the way down and all the way back up. We bounced, okay? And we created this really unique candle, which made me think that we were probably going to have a green candle yesterday. We opened too low, we drifted down too fast, and of course we have a red candle. Okay, well, does that mean doom and despair? No, I don't think so. I think we'll actually get a really good bounce today. And that's in part from a couple of reasons. From a technical standpoint of charting, we should get a bounce because we're really close to the 50-day moving average. And it may take 2 or 3 days to bounce. In other words, we may move sideways along this line before we kick back up, okay? Unless, of course, something in the news causes some panic and it triggers a slide. But if we don't get any news to make that happen, I think we get our bounce. And it's supported by this too. So let's move over our market calendar. This is our market, our events calendar, our economic events calendar from thestreet.com. And I've got a number of things here, but one of the things that says we're going to have a good day today, I believe, is, check it out. Retail sales numbers have already come in. They were expecting 0.4, came in at 0.7. That's a really good increase. Ex-auto sales came in much better. Retail sales came in much better. Everything's better than what they were expecting. Okay, our initial jobless claims 297,000 is what they're expecting. Came in at 294. It's a little bit less. Everything points to green based on the information that we're seeing right here. So I think we're going to get a bounce today. In fact, I will probably more than likely buy some sort of stock, probably on SPY, anticipating that bounce. That's what I'm probably going to do. Of course, I have to wait those first few moments after the market opens to see what it is that I'm going to do. I have to, you know what I'm trying to say. I'm sorry, I have not had a cup of coffee yet. That's my problem. Okay, that's better. I have to wait until the market opens to see what people are going to do and gauge their emotions and their intent before I make a play myself. Remember, we're following along behind these big boys. We're not making decisions without seeing what they're going to do first, because we're just like we're like that fish that swims around the shark and picks up all the scraps. We're like them. Okay, we wait and see what the sharks are going to do, and we follow along behind them and just get the little pieces. But I've got to wait for those sharks to move. So that's our outlook for the day. Hope that helps. Oh, let's talk about IBM real quick too. That's our exercise stock. In charting, we had a big, huge red candle down, just like the overall S&P 500. And we may move sideways some before we complete our charting down to the bottom. But for today, it'll probably be green, because I believe the S&P 500 is going to be green, and it's going to be green too right along with it. And it's going to be pulled along by what the S&P 500 does. So I expect a little bit of up or sideways movement on IBM. Okay, that's what I'm expecting. Okay, so now I'm good to go. That's all I got. Peace out. Bye.